All right, I have the pleasure of being joined today in the studio by a good friend of the team and a good friend of mine, David Lichten. Welcome, David.
Thanks for having me, Harrison.
When somebody says, David, what do you do? How do you describe being a private lender?
I kind of think of it as sort of a tool in your toolbox that fills all the gaps that exist between traditional lending options and pursuing some kind of real estate play using your own money, entirely your own liquidity, and all the sort of things that occur where it might be a matter of timing, working with a bank, or maybe putting all your eggs in one basket in the sense of tying up all your capital in one deal.
Mhm.
You might miss out on opportunities. Maybe you're trying to get started and you don't have the cash to do everything. Maybe you don't qualify for lending with a traditional lender. All sorts of scenarios that come up, but we kind of fill all those gaps that form.
Okay. So, obviously in that situation, you work with a lot of investor type clients.
Right.
But as you mentioned, you do have other solutions. So are you working with kind of a non-investor client, or is it primarily just investor type clients?
Yeah. So the vast majority of the lending that we're involved in is going to be with investor types, people that flip houses, builders who want to pursue spec builds,
Yep.
and also folks that are looking to acquire an asset that maybe in the present moment it physically doesn't qualify for financing. Maybe from a cash flow perspective, it doesn't qualify for financing, and they need a bridge to long-term lending, and we'll provide them that bridge to get to a bank. But in general, really the criteria that I look at is there real estate that we can be in a first position on? Does the borrower have a plan that we can hang our hat on? Is that something, whether it's a refinance or a sale, that we feel encouraged by the data that's there?
Mm-hmm.
And then they're not living in it. It's not owner occupied. And then from there, that's really where we can kind of start fitting it into the services that my company provides. So it's not just the real estate investor per se who wants to do a flip, any kind of construction. I've done some work in cannabis where traditional lending isn't an option there right now.
It's hard to use that there.
Yeah, maybe there's partnerships that need there's a dissolution going on, and there needs to be a moment of a lender that can allow for that kind of shift to occur. Those are just a couple other examples, but it's really any scenario where there's a need for a bridge to be built, and we can get you from point A to point B.
Okay, great. Yeah, and which I can speak from personal experience from using it myself, and a lot of other people I've sent your way, is that it's this marvelous tool that can solve a lot of problems.
Yeah, especially for people that want to grow, that are new.
Yeah, absolutely. And one of the common questions I get when I talk about this is I get people saying, "Well, what is it though?" Like I know what a mortgage is. I go to the bank and they write me up a bunch of docs and Fannie and Freddie and all this stuff, but you're not using conventional loan money. What is a private loan?
So a private loan it's kind of anything that doesn't necessarily fall under the sort of traditional mortgage companies or bank lenders. So for me and the company that I work, I'm technically a private mortgage broker, where I sort of work with a few different distinct sources of capital to find the best fit for whatever that scenario might entail. And that might be derived from the property type. It could be a flip, for instance, a single family home that's involved. It could be a larger commercial scenario where, say, it's mixed use and office building. It could be a land play as well. And whatever sort of the property type, the borrower's experience might come into play as well. And geographic constraints come in as well. Population density, certain lenders in Maine and nationally, they have sort of rational and irrational likes and dislikes, and what are going to be the scenarios that they are comfortable with to lend on. And so taking those into consideration, I kind of identify who's going to be the fit, both from an ease of use, but also a reliability, who's going to want to do the deal. And taking out of all those kinds of different factors into play, the borrower's experience, property type, location, so on and so forth, I identify where is this going to lead to the greatest success. And I work with a lot of high net worth local individuals. So somebody might have an opportunity to pursue a project and they've got a really wealthy family member or family friend or whatever, somebody in their immediate orbit. I can kind of play that role as well. I do also work with national and regional lending companies that are private lenders, and they're not always the best fit in Maine because they tend to have geographic limitations. But then I also do work with some private equity firms that are better suited for larger commercial scenarios where maybe you need to, again, get from point A to point B. Maybe that's leases are expiring and a bank is uncomfortable with the cash flow projections because of that uncertainty. And we can provide them basically with the time to eliminate that uncertainty. So depending on kind of what the situation entails, I will bring in one of those kinds of non-traditional sources of capital to build that bridge.
Gotcha. So just as I'm hearing you describe that, it sounds like, non-traditional sources of capital. That is your high net worth individuals, private equity firms, other, not bank sources of capital,
Right.
because you're able to go and maybe lend to somebody on a project that a traditional bank wouldn't like,
Right.
but a high net worth individual looking for a return on their money that's otherwise just sitting in the bank might be willing to take on.
Yes. And so what comes with that is, our lending is typically more expensive than what you would see with a bank.
Sure.
And you're basically paying for the risk tolerance, the aggressive movement, getting to a closing table, without an appraisal necessarily, overlooking maybe issues of credit. We're tending to look at more what is the collateral involved, what's the asset involved, versus when you go to a bank, you're providing a personal financial statement, they're pulling your credit, you're looking at 2 years of tax returns. And as somebody who's been self-employed, it's not always something where my 2 years of tax returns are going to be something that always excite a bank. Even if my income is great, I might have been at one company and now I'm working independently, whatever it might be. Sure. Every situation is different. Banks have their reasons why they're not going to necessarily take on something, or maybe they just can't move quickly enough. In the last 2-3 years, with the way that the market has been with COVID, I have seen an increase in deals where agility has been the reason for going the route with private lending versus going with a bank and maybe missing out on an opportunity because you have a 90-day close. And a seller might not be inclined to look at that.
Yeah. So the nice thing is that, in situations where bank financing either doesn't work because the bank doesn't want it or the timeline doesn't work, or situations where maybe a traditional bank said no, that doesn't mean the deal is potentially dead. That's the problem you solve, is being able to put some of these deals together that aren't necessarily, perfect for a traditional bank or perfect in sense of the timeline. As you call it, a bridge. You can be that bridge to help make things happen.
I'm working on a new deal right now in New Hampshire where the borrowers in this instance have an opportunity to buy an abutting property and they qualify for bank financing. The property qualifies for bank financing, but the seller is not inclined to consider selling to them if it's going to be this 60 to 90-day process. Where there's also the added uncertainty that, in the market conditions we've had for the last couple of years, appraisals have been keeping up with the way the market has moved.
Sure.
But it doesn't always necessarily match up. And having a financed offer come into play, where an appraisal is an integral part of that, you might miss out on the deal because the seller is ambivalent to take that offer, knowing that there's this added hurdle in the process from pen to paper on the transaction to the actual closing table.
Gotcha.
Where that appraisal could kill the deal.
Interesting. Yeah, there's all these different types of hurdles and potential, I guess, kind of bumps along the way that, you have the benefit of taking out, just in some cases just make the process a lot smoother, a lot easier,
Absolutely.
A lot simpler, for both parties, which is great. So one of the things I like about working with you, David, is that you're not just trying to push a loan on somebody. You're very much a consultant. You're very much a support resource of sorts. So can you describe a little bit about your role as a private lender broker and what it's like working with Kennebec Realty Capital?
Yeah. So the consulting component is one part that I have, in the almost 10 years now that I've been doing this, I've really tried to kind of focus on that as sort of a value add component. We think about in services that we're in. What can you bring to the table other than the immediate, can I fund this deal?
Sure.
So if somebody brings me a project that they want to pursue, in the underwriting process, I'm looking at highest and best use. So is the plan that the borrower has in place something that's going to, result in the most advantageous scenario? And that might be a short-term, windfall from a sale. It might be long-term cash flow play. When I'm evaluating something, I'm looking at, okay, is there an opportunity to convert this multifamily to condos down the road? Is that going to be an advantageous scenario? Does it make more sense to keep it as a rental? Is this a scenario where by pursuing market rate rents, we're not going to have the most profitable scenario versus using government back rents? It's always, the last couple of years have been a very interesting period to be in this field because there's been so many shifts and so many markets have changed dramatically, especially in Maine. But I am going to kind of go outside of just saying yes or no, I can do this loan. Here's what the loan looks like. I'm going to try to illuminate what other avenues are out there, so that, maybe this borrower who's coming into the situation is thinking, oh, I'm going to flip this house. I'll get my money out. Well, did you know that you've got 400 feet of road frontage and you can break a lot off, and you don't have to go to planning board to do that because it's a 5-year window to split, you don't have to go to planning board for something like that. Whatever else I can provide, it might be connecting them with the right subcontractors that they would need for the project. It might be design components. I am not an interior designer or an architect, but if I see components that I think will create a more viable project, a more, profitable scenario, I'm going to speak up on those things. I also, as part of that, if something comes to me and, it's great for me to get deals, but I'm a person who has a very long-term perspective in growing my business and helping my lenders that I work with.
Sure.
And sometimes that means saying no to a deal or encouraging a borrower to go to a bank because that makes more sense for them. Getting every single loan opportunity is great for my income, but that isn't necessarily acting in the best interest of the borrower. And if I can demonstrate consistently that that is something that is a central tenet of my business and what Kennebec Realty Capital does, I might not necessarily get that loan, but I would hope that the message the borrower receives is, this is somebody who's trustworthy, an advantageous person to have in my orbit. I want to work with them, and maybe it's not right now, but it's on the next one. I'm going to send all my referrals to them. I want to work with this person. It's great to increase your bottom line in the immediate, but it's not about this quarter. It's about the overall health of the business. And sometimes that means saying no to something or pushing them to another option.
Yeah. Well, and that's one of the things I really like is that I think a lot of people have the perspective of a private lender or a hard money lender is often mentioned as kind of like a loan shark of sorts. You're just trying to push loans out there, collect your interest, and you don't really care if they succeed or not because you just want to get paid on it. But in reality, you have a vested interest in the borrower doing a good job because that also helps the person who lent the money.
Absolutely.
And for you, really, you're trying to create the best possible scenario so all parties win, because if somebody loses, really, you lose.
Absolutely. And not only if my borrowers have issues, it can affect my relationship with the lender.
Yep.
And the deals that we might look at that might be on the riskier side, that, there are instances where I really need to say in pitching the deal, this is really something that it is on the riskier side, but, I have confidence, and I have confidence in the borrower, I have confidence in the asset, and we'll move forward with it. It's extremely rare that and I'm trying to run through my memory of ever having an instance where there was a deal that I was looking at where I, had the confidence in the project where I took it to my investors and I couldn't get any one of them on board. Eventually it will come together. The deals that I do say no to, 95% of the time, it's me saying, no, I can't help you. I'm sorry. And here are the reasons why, and here's where you can go with it.
Yep.
And there are some borrowers that, will listen to that and they'll take bits and pieces of my advice, and you by no means have to. But I've also seen it where they've gone and they've pushed the deal and they put, all their savings into it, and they got it done with maybe another option. And it didn't work out. And I would much rather see somebody, people are very eager to do a deal.
Right.
And, we kind of talk about in this field, analysis paralysis.
Uh-huh.
But at the other end of that, it's being overly eager, and you want to be aggressive, but you also want to counter that with some level of caution. And so I try to play both sides of that. If I think a borrower isn't being aggressive enough, I'm going to say so. If I think that a borrower is being too aggressive, I'm going to say this isn't a good fit for you. You want to do this $1 million flip, and you're putting all your eggs in that one basket. You're pushing all your chips in the center of the table. Well, why not do, the $300,000 starter home where your out-of-pocket exposure is smaller, you have a larger buyer pool, that prospective buyer on the other end is not going to, lose their head over not having Viking appliances.
Right.
It's things like that, that
much bigger margin for error.
Yeah, much bigger margin for sure. And I think people get really caught up in a lot of the sort of HGTV dialogue where they're going to become a billionaire, on doing one deal, and you're all of a sudden, you're a real estate investor, and you're, it's hard work. And
it is.
You don't want to see, for me, it's again, not about doing one deal with somebody. It's about building that relationship and doing many deals with them. And sometimes that means delivering bad news and saying no.
Yeah. It's unfortunately, it's the nature of it. Sometimes you've got to be that sounding board to let somebody know that maybe there's a better way, or maybe this just isn't the right one for you.
Yeah, absolutely.
So, all right. So if somebody's listening and thinking, boy, I've got a situation right now, or I may have a situation in the future where I'm going to need something more creative. What is the best way for somebody to get in touch with you?
Best way to get in touch with me is my cell phone, which is my mobile office, 917-613-2130. Not originally from Maine. Sorry.
Yeah.
But you can go on my website, KennebecRealtyCapital.com. There is a form on there that immediately goes to my cell phone. My office number is listed on there as well, which will forward to my cell phone. I am very accessible. Don't call me at 10 o'clock at night, but text me. Yeah. Reach out to me. I do not have any limitations in borrower experience. I work with people that are new. I work with people that have never swung a hammer before. I work with people that don't have a lot of resources.
Yep.
And I'll help. I'll see what I can do.
Awesome.
So yeah, just going back to your point originally on the sort of consultation component. I have a lot of borrowers that I talk with from, avenues like this, where we talk a dozen times before they ever do their first deal.
Yeah.
And yeah, use me.
Yeah. Excellent. So again, David Lichten, Kennebec Realty Capital, good friend of ours. Thank you so much for the time today, David.
Thank you, Harrison. Thanks for having me on.